Good afternoon. How's everyone doing? I'm Bryan Chambers. I'm the Vice President of Ventures at Capital Factory. Capital Factory is the center of gravity for entrepreneurs in Texas. We've got boots on the ground across Dallas, Austin, and Houston, Texas. And since 2013, we've been the most active early stage investor in Texas. I'm super excited to welcome a special guest today, Roger Dickey, to have a conversation about a new type of fund structure that both of us utilize called a rolling fund. Roger has been, he's been a founder of multiple venture-backed tech startups. He's had exits. He's invested in, I think, 5 and climbing now tech unicorns. And he started a new company called Made Renovation, which we're going to talk a little bit about as well. And in addition to that, he manages a rolling fund. So we've got a lot to cover today. I'd love to welcome Roger up. Roger, are you with us? Oh, I see you on mute.
Oops. Yeah, good to be here. Thanks for having me.
Awesome, Roger. Well, it's great. It's awesome to have you. And I think one of the things that I want to double click on a little bit today for those that are tuning in is your geographic experience, which is particularly unique. I know you spent I think the bulk of your career out on the West Coast, but I think you're tuning in, if I'm not mistaken, from New York City. Is that true?
That's right. Yeah, over here in Greenwich Village. It's a beautiful neighborhood.
And you also have a place in Austin, Texas. I think that might be pretty recent as well. Is that correct?
Yeah, I just bought some land in Austin. Prices are insane, but I wanted to get in before they got more insane. And I'm going to build a house on it. So who knows what that's going to become, but excited.
Well, that's fantastic. I hope we can you can share some insights about what's happening geographically across the United States as well. Of course, things in Texas are surging. It certainly seems like. So hope to tap into that a little bit, but. Roger, in the very brief intro that I gave, I mentioned a whole lot of things that you've done. How do you spend most of your time today? And I want to walk our viewers through some of your experience. And so, first, how do you spend time today? You're running a tech company. You're making investments through this new rolling fund that you have. And how do you balance that?
Yeah, it's a lot. The primary thing, of course, is the company that I'm working on called Made Renovation. Been around about 2 years, raised about 25 million. It's grown fast. We have about 115, 120 employees now, which is just crazy. And I've only met maybe like a third of them. So it's definitely a new age that we're in. But yeah, I mean, we've seen a ton of traction. Everybody's doing home renovations. So that's been growing a lot. And that's I would say 80-90% of my time. I definitely make time for the rolling fund as well. I've made to date, in the last 10 years something like 80 or 90 investments. So it's been around 8 or 10 a year, and I'm looking to accelerate that pace with the rolling fund. So we've raised a little bit. I think we're at maybe $200,000 a quarter, looking to get it to maybe 500,000. With a sweet spot of writing $500,000 checks per quarter, mainly into people that I know already, because I've been in Silicon Valley 13 years and kind of, you have this privileged position of just kind of having coffee with your friends every couple months, and when they start companies, just like writing a check. You don't have to do any diligence. So, trying to definitely use mostly my network versus being an active investor, which allows me to do that as kind of a part-time thing. And my third big interest these days is carpentry. So I've been making furniture for friends and try to spend nights and weekend time in the wood shop. So try to fit that in as well.
That's a very cool hobby. We're going to come back to and spend some time on Made Renovation, but take us now all the way back. I think the first company you started, was it Gigster, or did you have a company before you started Gigster?
Yeah, so I was living in Austin. So I went to University of Illinois, graduated, moved to Austin for my first job. I was a C++ developer at National Instruments, which is obviously pretty big there. And yeah, I mean, I thought I'd have that job for like 20, 30 years. My dad had the same job for 20, 30 years. And that was kind of the plan. I was never really into startups. I had this crazy friend who was going to UT at the time, who taught me about startups. And he's like, hey, like, you're an extremely good engineer. And like, I've got a business idea. Do you want to do something together? So my very first startup was, if you could call it that, was working with this guy and my other buddy at UT Austin. We made like a marketplace for tutors. The idea was to get college kids to tutor high school kids and like take a cut of the tutoring fees. We didn't incorporate, we didn't raise any money. We didn't ever even launch. We just kind of spent a lot of time worrying about the company name and the logo and just a bunch of dumb crap you worry about when you start your first company. I think we worked together for 3 or 4 months, and then both of those guys got jobs and graduated, and they're like, yeah, we're not doing this anymore. So that gave me kind of the first taste of it, even though it was definitely a shit show. And about a year later, I saw that Facebook launched the application platform. So you could make apps and put them on Facebook. And I'm not, at the time, I wasn't a business and marketing guy, right? But I could definitely make apps, and I also like doing a bit of the design. I'm what some people call, I was what some people call a product engineer, where I can do product, I can do UI, UX, I can do front and back end code, right? So that was my passion area, was maintaining all those strengths. So on Facebook, you just make a game or an app and you just click upload, and then suddenly everybody on Facebook can play it and share it with their friends. So that was kind of the perfect on-ramp for me to start a business. So I quit my job the day I found out that they launched the application platform. Just started making apps. We made about 15 to 20 apps. I was working with a buddy of mine from college, and one of them really took off, and I sold it to Zynga. And that's how I got out to San Francisco.
And which game was it? Was it a game that you built that was acquired by Zynga?
Yeah, we tried making some like non-game apps, and I think my strength was more in gaming. So the game just blew up. It was kind of it was kind of like Grand Theft Auto and this game called Drug Wars mixed together. So it was called Dope Wars, and you role play as this like drug dealer, and you deal different drugs and you make profit, and then you spend it on weapons and you join drug cartels. And it was. I just crammed all these like themes from like random action movies I'd seen and Grand Theft Auto into this game, and people loved it. It really took off. It was a great opportunity to come to Zynga. Obviously, my first acquisition, my first time working at a real startup, kind of run by somebody else. And Mafia Wars was, so you probably heard of Mafia Wars. That's the game that I made at Zynga. So my first 8 days at Zynga, I coded Mafia Wars from scratch and launched it. And that was kind of I'd say my biggest contribution to Zynga was founding Mafia Wars.
And so the walk us back. So the first game that you started, was that referred to as what I commonly hear today as what's called an MMO? And then it sounds like you parlayed that to do something very, very similar again with Mafia Wars, also an MMO, correct?
Yeah, they were MMOs, also RPG. So MMO is massively multiplayer online game, and then RPG is a role playing game, right? So, with Dope Wars or Mafia Wars, you go in, you have a certain like persona, like you're like in the mafia, like you're running your own mafia family in Mafia Wars, but you're playing with like a ton of people out in the world, right? And you're kind of exposed to all these different strangers, which is the MMO ingredient. And the RPG ingredient is you have a character, you can upgrade, you can buy weapons, you can acquire property, like you can kind of like evolve your character and get stronger over time.
Yeah. So you've had, at this point, you ended up having a couple of, at least 2 games that, one I think was you built Mafia Wars underneath Zynga, correct? But you sold a company to Zynga. Correct. And then you also started Gigster, which ended up getting acquired as well. Talk to us a little bit about what it takes to get a company to exit, and maybe the lens that's given you as a successful investor. It's obviously given you the capital to make investments, but What type of knowledge has that really led you to being a better investor? Can you share with us a little bit about that exit experience?
Yeah, of course. Yeah, I mean, there are two ways to sell a company, really. One is to just build a really strong business that's really profitable, and get your EBITDA as high as you can and show growth potential. And then there's plenty of people that'll buy you, plenty of private equity firms that will look at that. They'll give you some multiple on your future cash flows, and they'll bring you into their portfolio. There's an extremely healthy ecosystem of private equity, and now we have micro PE and mini PE that'll go buy companies that have like $1 million in revenue. So there's a healthy, thriving, growing ecosystem in private equity that'll just buy you for your profits. That's kind of number one, and I guess probably the traditional way to grow and sell a business. Number two is a strategic acquisition, right? So you look at a company like Instagram. Facebook bought Instagram for $1 billion. Were they making $1 billion in revenue? No, zero, right? But Facebook looked at it, and it had certain strategic value to Facebook. So you look at a company like my current company, Made Renovation, and we're making profit, but also you look at us and we're a potential strategic threat to Home Depot and Lowe's because we own the customer. The customer comes to us, they do a design with us, and then they buy the materials through us, right? So Home Depot doesn't necessarily own the customer because maybe a third party like us would buy materials from Home Depot, but then tomorrow we could turn on and buy those materials from Lowe's instead of Home Depot. So you don't have as much control and predictability over your demand channel if you don't own the customer. And that's one example of a type of company that can get acquired, is if you own the customer and a supplier doesn't, the supplier might buy you, right? So there's a million scenarios like that. And that's, I think, how most startups get acquired is kind of because they have some strategic value to a big player.
And so for Made Renovation, you had mentioned you raised 25 million or so, or 30 million ish.
25 so far.
25. Yeah. And can you share who some of those investors are? Is that public news today?
It is. Yeah, we actually did. We just did an announcement. I want to say 2 months ago. I think we were in TechCrunch. We had another one in Architectural Digest, which was super cool. It's a great publication. Ton of respect for them. So we raised our seed round from Founders Fund. They led the seed round. At that point, we were just an idea lab. We didn't even have the idea yet. I was just like, hey, give me $3 million and I'll figure something out. So that was the seed round. Then we did a Series A from a combination of folks, firm called Base 10. Which is, I know the guys who run it, super cool guys. Thesis, another big investor out on the West Coast, really, really, really solid investor. They don't have the name recognition of a Sequoia, Benchmark, Kleiner, but amazing guys, and their returns are just insane. I think they're going to become a lot more well known over the coming years. And then Insight Partners actually led this Series A. They're based out here in New York. They're great, huge fund. I think they're a $20 billion fund, and they have a venture arm as well that's writing big checks. So that's who we're working with so far, as well as Jessica Alba came in as a celebrity investor, and a bunch of people I've worked with at my previous companies.
Yeah, and so you, through some of the past startups that you've raised from the likes of Andreessen Horowitz, you've raised from Greylock, you've raised from Founders Fund, you've raised from celebrity investors. You just mentioned Jessica Alba. I think you've also had Michael Jordan and some others that you've got to do some business with in the past. What does it take to raise money from investors like that? They're obviously, you just mentioned you were able to secure a pretty early check from Founders Fund. That's gotta, built on your experience, right? You mentioned earlier in the call that time is frequently the best due diligence. You get to sit down with some of your friends. You've been waiting for them to start companies along the way. So the due diligence is really, really easy because you know who you're investing with. But how do you get out there and successfully raise from a name like an Andreessen Horowitz or an Insight Partners? What does it really take to secure investment capital from some of the biggest tier one investors or celebrity investors? What comes to mind?
Yeah, good question. I'll speak to both because it's very different. So with tier one investors like an Andreessen, when Andreessen backed my last company, Gigster, they write I think they write 10 checks a year. You're talking about a massive, really well-known fund. They're writing like one check a month, and of course they get thousands of pitches. So you need to be in the top like 0.1% to even be considered. So when you look at a funnel like that, going from like 1,000 pitches to one investment per month, you want to first of all skip as many of the early steps as possible. So you're not sending your pitch deck to their website, right? You want like a very warm intro directly to a decision-making partner who can push you through the process quickly. So we had a very, very warm intro straight to Mark Andreessen from this guy who really, we went through Y Combinator, and I think there were, now there's 370 companies in the latest batch or something. Our batch only had 105 or something. And one of the YC partners told Mark Andreessen, this is the best company in the batch. You should take a look at them. And I'm investing personally. And this guy had previous exits, like Mark, he was a personal friend of Mark Andreessen's. So going through that extremely warm intro pretty much got us directly to Mark. We did one meeting with one of the associates on the team. But Mark kind of liked the idea so much that I think she kind of rubber stamped it and passed it on to Mark. And keep in mind, Andreessen's whole thing, and you want to understand like whether or not your company's a fit for a fund. And Andreessen coined the term "software is eating the world." Well, our company was like software is eating software. Like we were building software to make software faster. So I think he already was kind of predisposed to really like the idea, and apparently it was an idea he'd been thinking about for many years. So we came in, and it just made sense and clicked and moved quickly. I think in the second meeting, one of the other partners was asking us all these questions and really grilling us, and Mark was answering the questions for me. I wasn't even like pitching the guy, like Mark was pitching the company for me. And the same thing happened when we had the big partner meeting. So if you get a really warm intro and you come into a partner and or a firm where it's a theme they've been thinking about for a long time, then they can move you through the process really quickly. And at that point, they're really just evaluating you as founders. And they're going to do a lot of back channel on you and like look to dig into your background. And I think they really liked my background and my co-founder's background, and they already liked the idea. So yeah, I mean, I think we kind of lucked out that was a good match for Andreessen. There were other firms like tier 2, tier 3 firms saw Gigster and just passed on it, right? So it's not always the case that like, if a tier 2, or I don't know, like if a tier 2 would pass on you, a tier 1 wouldn't want to back you. It can be very investor specific. So, and I speak to the celebrity investors as well if that's interesting.
Yeah, please do. How does that differ, per se, working with a celebrity investor? Do you always find them in a follow-on position relative to a tier 1 or a tier 2 institutional investor, or how have those dynamics worked for you? I know it can be unique on a celebrity by celebrity basis, but how were you able to pull off the names like Michael Jordan and Jessica Alba?
So they'll always follow. It does help, as you said, to have a tier 1 or tier 2, although they don't really know like what tier 1, tier 2 investors are. So as long as it's an institutional, it's typically okay. But in both of those cases, the absolute number one hardest part about raising money from a celebrity investor is just getting to them. That's the number one hardest part. Jessica Alba actually reached out to us. She DM'd us on Instagram and was like, "Hey, I like your company," and she'd heard of Yardzen as well. So, she's like, "Oh, is this like Yardzen? I might want to use this for my parents' bathroom." And, we're like, "Yeah, sure. Like, please. And by the way, we're raising money. Do you want to invest?" And, a lot of celebrities at this point. So there's a few like Ashton Kutcher that write a bunch of checks, but that's like the vast minority, like 1% of celebrities. But most, if not all celebrities at this point are aware of startups. They're aware that it's an interesting asset class. They're aware that like, their peers have backed startups and put their name on startups. Like Leonardo Dicaprio has been investing, and like you'll see his name pop up in the news. So like other celebrities, like Jessica Alba is aware that like Leo DiCaprio invests and aware that Ashton Kutcher invests, right? So they have like some understanding and some interest, but a lot of them are very new to it, very inexperienced. So, and they're also very afraid of you like misusing their name, and they're afraid of like the PR that comes with it. Mm-hmm. So you have to help them build a lot of comfort with that. And you have to just like help them understand what you're doing and get them excited about it. But the really, and you know, I'm 2 for 2 on like, those are the only 2 celebrities I've tried to raise money from. It. Michael Jordan, by the way, had never invested in a startup before. We were his first startup investment. So I was pretty proud of that. And that was actually about a 6 to 8 month process for me to even figure out how to get to him. And then once I did, I got an intro with his money people and just pitched the idea. And it was like relatively straightforward after that. So yeah, that's really the hardest part, is just finding the right path there and then making sure that they get comfortable with being associated with you.
So, you know, you mentioned Leonardo DiCaprio, and we happen to have made an investment with him somewhat recently. We're just co-investors together in a particular startup. But I think one of the other things that is true about celebrity investors is they tend to be very what we call hyper intersected with a particular deal. They're value driven investments a lot of times. I think a lot of people happen to know Leonardo DiCaprio is a big advocate of climate change, and so we happen to be in a really, in a climate change oriented deal, a clean, sustainable, energy driven deal that has the potential for a very big impact. So that's something that obviously he cares a lot about. So he's choosing to put his personal investment behind where he aligns his values. I think that's one way celebrity investors like to invest as well. But in other times and in other ways, they are influencers and they can contribute direct value to the company. And I think that perhaps maybe that's the case in Made Renovation with Jessica Alba. But what was it? Today you guys have you've started with at least what I believe is a pretty incredible beachhead. I told you before we got on this call, I redesigned my yard. I use YardZen. It's been a great experience. It looks, Made Renovation looks to be really focused on bathrooms right now as a beachhead. I think once you can nail a bathroom, you can probably do a lot of different things. So where do you go next? Today you're doing bathrooms, but what's the big vision for Made Renovation, and how far can you take this? Is it everything interior, or is it just going to be a subset of the things that people are most frequently renovating inside their homes?
Yeah, great question. I mean, kind of starting from the vision, we want to help our customers love their homes, right? Like, I don't know if you've ever done like a interior design process or renovation process. You get back home after a long trip, you open your front door, and you just look around and you're like, wow, like I get to live here, like I'm so proud of this house. I feel at peace in this house, and I think being surrounded by great design, whether it's like at a really nice restaurant that's really tastefully designed, or like a nice hotel, or in your own home, hopefully, or in an art gallery, wherever, being surrounded by great design, I think it really comforts the mind in a lot of ways. Like there's this kind of like this quiet joy that you get from being in a great, thoughtfully designed space. And you get that every day. It's sustainable, it's renewable. So I think a well-designed space is a, sustainable, repeatable source of joy. So we want our customers to have that. That's kind of like the emotional level of like what we're doing and why we're doing it. Getting to your question about different rooms and the scope of the business and how it evolves, you're absolutely right. Bathrooms is a beachhead for us. And a bathroom has 4 walls. It's self-contained. A lot of projects are just what we call rip and replace. So you kind of rip out the old materials, you take it sometimes down to the studs, redo the drywall, and then you just put in new materials. A kitchen, or there's other home renovations that can get a lot more involved, a lot more complicated. You're running, gas lines, electrical lines. There's a lot more risks. There's more permits you need. So we wanted to start with bathrooms. We do plan to do kitchens as well, which will roll out next year. And we plan to expand room by room. So we we want to be a technology company, and as a technology company, we can't handle the infinite like variability and that can come from other home renovations. We need like more scoped units of renovation work. So you get that with a bathroom. Bathrooms all have the same like 12 components. You get that with a kitchen, which is more complex but still a scoped problem. You get that certainly with a backyard, which Yardzen's able to do. There's a company called Ergion that does fences, and I think they do driveways, which it's also like a kind of repeatable, like parameterizable problem where it's like, okay, what's the slope of the driveway? What kind of concrete do they want? What color of concrete? Like, is it going to be polished concrete, or what sealant do they want? Is it curvy driveway or straight one, right? Like, you can just kind of plug that into a model and you can get a design, and then you can link up with a contractor who can come install it. So I think there's a couple companies right now that are kind of verticalizing home renovation, and those companies are finding that they can scale, they can raise money, they can use technology, and they can get better margins than the companies that are all things to all people, that are basically glorified service firms. There were two like that. There's one called Pro.com, and there's one called Skylight. And they actually there was an announcement recently, they both had talent acquisitions. So those unfortunately weren't successful outcomes because they would do anything for customers. That's the key. You've got to pick a vertical.
Yeah, I'll reflect. In the last startup that I was a part of helping found, we ended up exiting to Angie's Home Services, and Capital Factory was an investor in our startup, which was Fixed, FIXD, and exactly what you just described was one of the biggest challenges that we faced was the scalability. Right, we focused on high-end regulated trade skills in the home, so HVAC, plumbing, electric, et cetera, and things that were wrapped under what's called a home warranty. But I think you just hit the nail on the head, and boy, it really reminds me of some of the challenges that we faced with the scalability of the startup. So for those founders that are maybe tuning in and listening today, I think taking Roger's words of wisdom in focusing on the predictability and the scalability is so critical. When somebody comes out to fix a toilet repair, you don't know if necessarily you've got a broken flap in there per se, or you've got a root growing into the toilet. Like the variables that exist for a toilet repair are still pretty infinite, and they can be minor or incredibly complex. And so when you get into those trade skills, we tend to find that was the case, and it's hard to really repeat and to scale something that has so many variables that are associated with it. So you just you made me reflect on that. That was one of our inhibitors to scale at Fixed. But
yeah, 100%. I mean, there's another example. There's plenty of examples here. There's one called PaintZen, that they just get this, like, the square footage of wall you want to paint. They give you a quote, and then they send out a painter, and they don't need to worry about the details of, like, what kind of wall is it, or where is it in your house, or what's the lighting is the wall going to be, have natural light hitting it, or what type of paint you want to use. They don't have to worry about any of that stuff. They just link you up with a contractor, and they generate a price. When you look at verticals, like Peter Thiel has this thing he says, which I always liked, about how you build a large company. Really, a large company is just a bunch of small companies like glued together. That's a way to think about it. Or I think he says it's a large monopoly is a bunch of small monopolies glued together. And we're starting off as bathrooms in San Francisco, and it sounds small, but it's actually like a $3 billion market. So there's a lot of room to grow there. And then LA is like a $5 or $6 billion market, and Seattle is like a 2 or 3. And you just if we can be the largest bathroom provider in each of these metros as we scale over time, there's a lot of advantages to that, and we'll build a massive $50 to $100 billion public company doing home renovations. But you got to start with humble beginnings that are manageable and scalable. So
you're predominantly Made Renovation is predominantly serving customers on the West Coast today. You're looking at expanding those services to places like New York and Texas as well. You mentioned you bought a home in Texas. Some of our viewers may know that Capital Factory has a unique investing thesis. We're almost exclusively focused on Texas. What do you feel like is going on in Texas right now? You've had a lens into Texas because you've got roots in Texas. You started and built some of your first companies back in the day. But just through the lens of what's happening maybe geographically across the country, where does Texas fall into the grand scheme of things, in your opinion?
I think Texas is an extremely interesting high potential place. I mean, I don't know if I mentioned this earlier, but I actually grew up in Texas. So I spent my whole childhood in Texas. Then I went to college in Illinois, came back to Texas for work. So I definitely have a lot of background with Texas, and obviously have seen it grow over the years. Austin too. I mean, I lived in Austin back in 2005 to 2007. And it's a very different place now. Property values are certainly very different, but like a lot else has changed, right? UT is an incredible school. There are a lot of great like larger tech companies in Austin. And that's how Silicon Valley was founded, right? Like it just had the right raw materials, where there was a high concentration of talent, and it was a good place with like a friendly government. And when you have ecosystems like that, like you can end up like building you can end up building a high concentration of startups. And Austin's been doing that over the years. When I started my company back in 2007, I didn't know anybody else was working on a startup, right? It was like this tiny thing. It was kind of this like, subculture. But now there's obviously a ton of startup companies in Austin. We've got, I think during the pandemic, a lot of people from Silicon Valley moved out to Austin as well. So Austin and Miami are kind of like vying for like who's going to be Silicon Valley part 2. And I know a lot of incredible people who moved out to Austin because it was just more their scene than a Miami or like in New York or somewhere else. So I think there's a new like infusion of talent that's come from elsewhere in the country, attracted by the good weather, attracted by friendly government policies, attracted by a place that kind of like fits their culture and their values a little bit more, attracted by a better tax situation, and also all the incredible talent that exists. So I think it's got incredible raw materials. And I think even though, it's been growing fast, I think Austin's still really early. That's why I thought very carefully about where to put my next home. And, I came to the conclusion that Austin's the right place. And I really can't wait to start meeting more people in the ecosystem. And I won't be moving there for a little bit, but everybody I've met is nice, smart, humble, like working on something crazy interesting. I think there's a ton of potential.
Well, we look forward to helping you get settled and hopefully making some investments together. Roger, you've just walked us through, especially through Made Renovation, your ability to just drive some efficiencies through tech. Let's talk a little bit about AngelList's new structure called a rolling fund. You rolled out a rolling fund so you can make investments. You can make investments in a more streamlined way and include others in that process as well. What do you find the primary benefits, and how would you describe a rolling fund for those that might not be familiar with a rolling fund, and how's it going so far?
Yeah, so a typical fund, easiest to explain it relative to a typical fund, which we're all familiar with. Typical funds every 2 years or so will go out and do a big capital raise, and they'll raise, I don't know, like an Andreessen would raise like $500 million for the primary fund or $1 billion. You go raise all that money, you close on it, and then you draw that money down as you make investments for 2 years, and then you kind of do it all again. So you're kind of in this, you have to keep context switching from fundraising to deploying capital to fundraising to deploying capital. And you do that on a 1 to 3 year cycle. Rolling funds change that concept. So with a rolling fund, you can accept subscriptions or investments to the fund at any time. So you kind of end up building the fund a little bit differently. Like as the fund manager, you're building the fund, you're also marketing the fund, you're sharing new investments that you've made on Twitter, on whatever social platforms you're on. People see that and they're like, oh, like Bryan just invested in, this cool company. Like, wow, I wish I could invest in companies like that. And you click on Bryan's profile and it's like, oh shoot, he has a fund. I can just click this link and I can invest. So I think there's the layer that allows, almost anybody to access it very easily and makes your fund almost like a consumer product, which is definitely another innovation. But it's packaged as a really simple experience for the LPs. it's easy as a fund manager to communicate updates to LPs, to onboard LPs, you log into an online dashboard and you click like, I'd like to make an investment. And then like all the docs just get taken care of. And like, there's so much legalese that goes into making your own fund. It could cost $100,000 to set up a fund. And AngelList has this all automated. They have hundreds of fund managers, and it's all automated. It's all powered by the web. It's never been done like this before. You've always had to go through lawyers and sign a bunch of DocuSigns, and there's always been like Excel spreadsheets tracking the investments and stuff like that. So it's a big innovation, I think, on the technology side. Also on the cadence of how the fund is raised. Also on, I think, your responsibility and your day-to-day as the fund operator. You're kind of always fundraising and always deploying. So you kind of develop this comfort with doing both and with how they interplay to each other. But under the hood, it does actually work like a traditional fund. So every quarter they make a new LLC. It would be like, Roger Dickey, like, 2021 Q3 fund. There's a new LLC, and then all the subscriptions go into that LLC, and then you invest out of that LLC during that quarter. And the next quarter, a new LLC is made. So under the hood, there are these little mini funds that get created, but on the surface, it rolls up to this clean web dashboard that makes it very simple to just subscribe and deploy capital.
We found huge efficiencies in the model as well. Many of those that you just named as well. How many investments have you made out of your rolling fund so far? Which I think rolling funds only really launched, was it just this year? So you've been a very early adopter of the rolling fund structure. But how's it going so far? And how many investments have you made? And can you tell us about maybe an investment or two in the fund that really excites you?
Yeah. So actually, I think they launched in a closed alpha or beta last year. So I've been, maybe I would say mid last year. So I've been involved since quite early. I've known Naval for a while.
Yeah.
True story. So I was one of the earliest users of AngelList, maybe the top first 100 or first 1,000 or something. And Naval actually, when Naval invested in Uber's seed round, he sent out an email to I think about 110 people who were AngelList users at the time. He's like, hey, does anybody else want to invest in this company? They were trying to disrupt black card services. And only 2 people answered the email. I was not one of them. I think two people answered it and 1 person invested. The valuation was $3.5 million, million with an M. So yeah, it would have been a nice time to invest in Uber. So anyways, I've known Naval for a while, so he kind of got me looped into it. I set it up. I had a very, very slow start. I wasn't really trying to fundraise, and I'm still not actively fundraising from LPs. If you find my rolling fund, go ahead and invest. I'd love to have you involved, but I'm not, marketing it. I'm not going out. I haven't even hit my own networks, honestly. So it's just been people who've kind of discovered it. It's been a good process so far. I've been writing about 5 checks per quarter, and I'll touch on one that I think is really interesting. That I just backed. So there's this company called Volition. They're a kind of like a parts catalog. If you've heard of Granger or McMaster car, you go and you get bolts of different sizes and you get little transistors, and it's if you make and if you're Boeing or if you're a car company, you're flipping through these catalogs and you're ordering parts and materials through them. It's been a fairly manual process. They have websites, but the websites kind of suck. So he's making this aggregator that aggregates all these part catalogs, and it links up into the tools that the mechanical engineers and electrical engineers are actually using every day. So it links into AutoCAD, tools like that. And it just identifies the parts that are in your model. And it says, hey, here, click here to order all the parts, or click here to get the price, or here's, you don't have to use this bolt, you can use this other bolt, and it's 1 cent cheaper per unit. So it's pretty interesting. And I think they have the opportunity to, as I talked about earlier, get ahead of their suppliers, ahead of the Granger and McMaster cars, and they get to own the customer. And then when you own the customer, you get to go figure out what suppliers you work with. So yeah, I think it's an interesting opportunity. An experienced founder. He did a hardware startup before.
Well, Roger, really appreciate the insights on your perspective on the rolling fund. I think we're experiencing some of the same things, same fund economics as every other fund that all the normal funds out there, but lots of efficiencies driven by tech that we're experiencing. I know you said you haven't hit your network yet, but how does somebody out there find your rolling fund, and how can they participate if they have an interest?
Well, I'd love to send a link out later if you guys can do that. I don't have it handy right now, but yeah, I mean, if you look, I think if you just look up Roger Dickey Rolling Funds on Google, maybe it'll show up. And by the way, you said I was in 5 unicorns. It's actually 12 now.
It's 12 now? Wow.
12 unicorns, yeah. 5 was like, I don't know, a year ago. It's amazing how much valuations have soared for top startups. It's just incredible. Like I feel like there was a month where like I had a new unicorn every day. So yeah, it's been interesting out there for seed investing.
Yeah, we're starting to experience that as well in Texas. I think the number of unicorns that we had invested in was really pretty small, and I think in just the last quarter it's grown by 3 or 4.
Wow.
So it's a hot market, and at least in Texas, where we spend the bulk of our time, we don't see any signs of it slowing down or cooling off too much. So we're pretty excited about the markets down here south and the potential, hence Austin really leading the way. Can't wait for you to get settled in your new home and for us to take a look at some deals together. For those that want to learn more about the Capital Factory Rolling Fund, we call it the Texas Fund. I believe you can access that at angellist.com/rolling. And you can take a look at some of the great investments we've made. I think we're making to the tune of anywhere between 10 to 15 investments on a monthly basis right now under the rolling fund structure, and looking to close down a pretty exciting Q3 and kick off Q4. Well, if there's any questions from the audience, we'd love to be able to take those. If there's any that are hanging out. But Roger, really appreciate, let's see, I got one question. It looks like it's coming in. Is there a disadvantage to be first money into a deal relative to investors that invest later in the quarters? How do you think about
that? To be first money into like a particular startup.
I think this is probably referring to a rolling fund. So the cutoff date at the beginning of a quarter versus visibility into maybe a couple of the investments that have been made, and then investing in later into the quarter in that same quarter, benefiting by.
No. Yeah, good question. No disadvantage is the short answer. Because that quarter is a fund, right? So as I said, there's an LLC that's made for that quarter. So whether you're first money in or last money in, you have exposure to all the deals that are done that quarter. And if the LP doesn't deploy all the money, then your funds actually roll over and you have exposure or partial exposure to the next quarter. But one question I get, which I'll kind of ask and answer, which is related, is like, how many quarters should I back? How many quarters of a rolling fund should I back? Sometimes there's an option. You can pick 1, 2, or 4. Pick as many as you can. It's better to have more quarters than less. Because if you just back 1 quarter of mine, like let's say Q3, like I only have 1 unicorn that I invest in, but then Q4, there's like 4 unicorns or something, or there's 0 in Q3 and there's 2 or 3 in Q4, right? If you only back 1 quarter, you're kind of like playing the lottery. Like maybe that quarter works out, maybe not for the fund manager. If you back 2 to 4 quarters, like you're more spread out, your risk is more diversified within that manager.
Got it. So I think you just touched on this, but I want to double click on it because it is an important distinction or feature of a rolling fund. Let's hypothetically, you've got a rolling fund that has subscribed $1 million in a particular quarter, but something happens, and you as an active fund manager, whether it's a global pandemic and everybody just takes a pause for a minute, you've only invested half of those funds, you've invested $500,000 of the $1 million of investable cash. What happens to that extra $500,000 that didn't get invested in that quarter?
Yeah, it rolls over into the next quarter so that you can as the fund manager, you can deploy it. And this actually happened with my fund. I think Q1, I only wrote 1 check. because I only saw one good deal, right? And I'm not going to just deploy all the money for the sake of deploying the money. So, I only wrote one check, and then Q2, I think I only saw 2 or 3 good deals. Q1 I wrote one check. Q2 I saw like a lot of really good deals, and ended up writing like more checks, like 2 or 3 checks, and then I saw like even more good deals this quarter, right? So, I think I didn't fully allocate Q1 and Q2, and both Q1 and Q2 ended up rolling into Q3. And then I wrote enough checks in Q3 to spend down the first 3 quarters of the year.
Got it. We'll take one more question. Do you find any differences in the way that you or the speed to deploy capital when it comes to a rolling fund versus a traditional fund? And when you find that right opportunity, when you find that next entrepreneur and that right idea, how quick can you move?
Hey, can you hear me? I think I may have disconnected.
Yep, Roger, we can hear you just fine. Can you hear me? Roger, can you hear me? Uh-oh. It looks like you're on mute now, if you can hear me. There you are. Are you back?
Yeah, I think so.
All right, we got you. So one more question, which is you find that next entrepreneur, you find that opportunity. How fast can you deploy capital? How fast can you write a check? How efficient is the fund in enabling you to do that?
For making an individual investment, what you do is you have to submit this like questionnaire to AngelList for each check you want to write. And it's like about 8 questions, and it's stuff like, do you have a conflict? Is this company run by a family member? Like after you make an investment, is there any like personal kickback you're going to get, so they ask you questions like that to suss out any conflicts. But, and they also ask you like to describe the deal and why you want to invest in it, which is, it's a good thing to do. Like that's when I take the opportunity to write a mini deal memo. And then I take those deal memos and I save them in like Airtable, which I use to power the fund. And then every quarter I send out like a newsletter for how the fund is doing. And I aggregate all those deal memos and just send them out. So anyway, it's a good opportunity to write that memo and like why you invest, how do you know the founder, like why is the market interesting? Have you seen the product? Have you played with it? What's the traction? So you kind of like, kind of write all that down, put that into this memo. Within 1 to 2 days, they approve it. I've never had one not approved. And then you link up. They have this like kind of portfolio ops manager. You link them up with the company, and they handle like the DocuSign and they handle wiring the money. So as a fund manager, it saves you a lot of time because you essentially have like an assistant, like an operations assistant that's running the mechanics of the fund for you.
Well, Roger, that's fantastic. We really appreciate you hanging out with us today and telling us about your rolling fund. We look forward to watching your rolling fund grow, and we look forward to making some investments with you here in Texas. We're eager for you to get settled and move into your new home in Austin, Texas, and looking forward to hanging out with you soon in Texas. Thanks so much for joining us. Again, if you have any questions about the rolling fund, feel free to reach out at ventures@capitalfactory.com. Find us at AngelList.com/rolling, and happy to answer any questions about the rolling fund structures, or how you can get more involved in the asset class, whether you're a founder, whether you're an investor. We look forward to doing more together. Thanks so much, Roger.
Great. Thank you, Bryan.